This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday the 10th of May in London. I'm Caroline Hepke.
And I'm Stephen Carroll. Coming up today, the United States is poised to announce major new tariffs targeting China's strategic sectors.
Benjamin Netanyahu says Israel will continue its war against Hamas despite US warnings.
Plus, to tip or not to tip, why British pubgoers are facing a new dilemma at the bar.
Let's start with a roundup of our top stories.
US President Joe Biden will unveil tariffs against China as soon as next week, targeting key sectors including electric vehicles, batteries and solar equipment. Bloomberg has learned the policies, which would mark one of Biden's biggest moves against Chinese trade, are scheduled to be announced next Tuesday. Bloomberg's Stephen Engel says it's the latest sign of how Chinese subsidies are causing a global backlash.
What we're hearing from sources in this scoop is that these new tariffs would be very targeted at the three key green industries that Xi Jinping has essentially earmarked as priorities for investment. The new three, as he called it at the National People's Congress in March, and that is electric vehicles, batteries, and solar.
Stephen Engel adds these targeted plans are a contrast to Donald Trump's pledge to levy a 60% tax on all Chinese imports if he wins the next election. Biden's tariff move comes after a stabilisation of ties with China amid a flurry of diplomatic engagements.
Benjamin Netanyahu says Israel will fight alone even without US help and must continue its offensive against Hamas in Rafah. On Wednesday, President Biden said that he would halt additional shipments of offensive weapons to Israel if it launches a ground invasion of the southern Gaza city. But Benjamin Netanyahu told American television personality Dr. Phil he has to protect his country.
I've said in the Holocaust memorial service that we had the other day, I said in the Holocaust we stood alone, but we were defenseless. And today, if Israel has to stand alone, we'll stand alone.
The Israeli Prime Minister was responding to the US withholding a shipment of bombs as a sign of the growing rift between the two countries. The UK has echoed America's concerns, saying that it won't support any major Israeli operation in Rafah.
The Bank of England and markets are now roughly in line about the prospect of a June rate cut. This after months of divergence between investors and policymakers over when borrowing costs will be lowered. The Bank of England held rates steady at its meeting yesterday. Governor Andrew Bailey said a loosening of monetary policy may come soon.
With the progress we've made to make sure that inflation stays around the 2% target, it's likely that we will need to cut bank rate over the coming quarters and make monetary policy somewhat less restrictive over the forecast period, possibly more so than currently priced into market rates.
It's Bank of England Governor Andrew Bailey. Following his remarks, investor bets on a June rate cut rose to over 50%, marking a significant shift away from pared back bets in response to stronger US inflation. In terms of data, two sets of inflation and labour market releases are due in the UK before the next Monetary Policy Committee vote on the 20th of June.
Sabadell is accusing BBVA of breaking Spanish laws with its $12 billion hostile takeover bid for the bank. Tensions are running high between the two lenders after BBVA's offer, which rival Sabadell says introduces, quote, incomplete information that may affect the market. The Spanish government is also opposed to the merger, saying that they have the final word on approving any deal. Hostile bids are a rarity in European banking. A spokesperson for BBVA had no comment when contacted by Bloomberg.
Bill Ackman was criticised for his public attacks on diversity and inclusion policies in a closed-door panel at the Milken Conference. About 40 people, including some of Wall Street's most senior executives of colour, confronted Ackman for an hour. Reportedly, even fellow panellists, which included Teacher Retirement System of Texas Chair Jarvis Hollingsworth and the President of Guggenheim Investments, Dina De Lorenzo, took Ackman to task. At least one speaker said his public comments reflected a poor understanding of the civil rights movement.
ARM shares tumbled on Thursday after a tepid revenue forecast for the fiscal year raised concerns about a slowdown in the tech sector's AI spending. The UK-based chip designer, whose upbeat forecast sent shares soaring only 3 months ago, said that revenue in the year to March 2025 will be lower than analysts had forecast. ARM CEO Rene Haas has been speaking to Bloomberg's Caroline Hyde and Ed Ludlow about why he is optimistic about their rate of growth.
We're actually forecasting even higher growth this year, north of 20%. And we also signaled to the markets yesterday that in 25, 26, 27, we see that growth continuing. So we have incredible visibility to our business, and we're very, very confident of this growth rate going forward.
That was ARM CEO Rene Haas speaking to Bloomberg there. Now, in a moment, we will discuss the Biden-China tariffs. It's a Bloomberg exclusive. The expectation is that they will be announced on Tuesday next week, and also why tipping in pubs in the UK is becoming more common. It's a really nice read on Friday. But first, the huge backlash that we've seen this week against Apple's Crush ad. The company's issued a rare apology.
Yeah, I mean, if you haven't seen it, it's essentially a giant sort of press that comes out and crushes a variety of creative illustrations, so musical instruments, pots of paint, works
Piano.
of art. Yeah, there was even an angry bird in there from the Rovio computer game as well. Now, Apple says it won't air the ad on TV as planned, and said that creativity was in their DNA at Apple, and it was important for them to design products that empower creatives all over the world. Dave Lee, our opinion columnist, has been writing about this, describing the ad as being tone deaf and saying he's found it hard to believe that no one saw it coming, that this ad would come in for such criticism for literally crushing creativity.
I think the internet kind of reacted so vehemently. I mean, it is a bit of a depressing thought. I think it probably reflects kind of a lot of the worries around AI and the sort of tech future that we all face. But yes, I think a rare misstep perhaps in Apple's advertising.
One killer line in Dave Lee's piece: it's Apple's worst marketing faux pas since it forced everyone to listen to U2.
Yeah, okay, I like that. Good stuff. Right, let's turn our attention then to the Bloomberg exclusive story. Very interesting, of course. Dating back to 2018, the United States has had broad sanctions against China. Now President Biden and the administration in the US has undertaken quite a significant review of those. The former president, Donald Trump, of course, wants to bring back much heavier penalties against China. But now the expectation around Joe Biden is that there'll be quite targeted tariffs.
And the fact that this is also, don't forget, an election issue in the United States as well, because Donald Trump has promised even more severe tariffs if he were to be re-elected in November. Joining us now to discuss is our Greater China Economy and Government Editor, Jenny Marsh. Jenny, great to have you with us on the programme. Just take us through the details of what we're expecting the US to announce with these new measures.
So President Joe Biden, he is poised to unveil this big decision next week that's going to target these key sort of clean tech areas that China's really thrown the weight of its economy behind. So we're looking at EVs, batteries and solar cells. And this is part of a broad review of tariffs under the sort of the Section 301 tariffs that Trump imposed during his presidency. But these levies are going to be new tariffs that are going to put growing pressure on three industries where Beijing is already feeling the heat internationally over issues of overcapacity.
Yeah, so how significant then is it in terms of escalation in the US-China trade battle?
It's sort of ramping up the rhetoric, but actually it's not as dramatic as it first seems, because China's access to the US market has been severely curtailed already because there are these 27.5% tariffs on autos. So EVs are not really, there's a very small amount of trade. It's not like with the European Union where they're actually shipping tons of these things out to Europe. They're not to the US. So it's more preventative. You know, China has this sort of first mover advantage and the US is really sort of closing the door on that. Solar panels, solar cells, you know, already facing tariffs. And so Chinese companies have already sort of put many of their factories in places like Vietnam, and they export directly to the US from there. So tariffs on Chinese exports not really going to have too much of an impact. Batteries is an area of concern where there'll probably be more impact. But on the face of it, it seems very bad. When you dig down, a lot of it actually is quite symbolic.
What about China's response to all of this? I mean, President Xi has been in Europe, where also there's been criticism of Chinese subsidised exports as well. What should we expect from China in terms of a response?
China has been very sort of muted in its response so far to sort of all of the jockeying that's happening during the US election. Both Biden and Trump have, they're both playing sort of the anti-China card in the election because it plays really well with voters. Biden last month has sort of pledged to 25% tariff on steel and aluminium to sort of win, to sort of secure votes among sort of union workers in those industries. It sounds good, but in reality, China doesn't really export much of that stuff to the US. So their reaction to that was quite muted. They announced some sort of tit-for-tat tariffs on a chemical that the US doesn't import much of to China. So you can expect sort of a like-for-like response, but it's damaging the relationship and unstable. It sort of destabilizes the relationship overall. They're trying to manage these ties, but the rhetoric and the trade tensions are ramping up.
Yeah, absolutely. Jenny, thank you so much for being with us this morning. Our Greater China Economy and Government Editor, Jenny Marsh. Then, as we expect the US to come out with these tariffs next week on Tuesday, there's also a very good piece on the terminal in terms of the research from the European perspective. The EU Chamber of Commerce in China says that China is losing its luster as the top country to invest in, firms sort of trying to avoid all of these geopolitical risks.
And looking at alternatives instead. Let's turn to a completely different story now. It's Friday. Perhaps you're already looking forward to your after work drink in a pub, perhaps.
Sunshine beckons.
Here in the UK. But do you tip the bar staff? Tipping used to be entirely optional in London pubs and limited to the change from paying for drinks. But that's changing. And as transactions have gone cashless, card readers at pubs are nudging customers to tip. It's creating some awkward scenes and leaving British pub goers with the sense pub culture is becoming Americanised. Tony Palazzo, a senior editor for global business at Bloomberg, joins us now with more details on this story. Tony, first of all, what's the background to this? How did you get onto this story and what did you find?
This was a pretty fun story. It started when I walked into my neighborhood pub and I ordered a couple of drinks with some food, and when the bartender put the card reader in front of me, I tried to tap it as I normally do, and it wouldn't work. And then I looked and I saw that it was asking me first to choose a tip. And I think it was like 5% or 10%. And being a polite American who's lived in New York and Los Angeles, I complied, and I tapped my card and I went back to my seat with my 2 pints. But I was a little shell-shocked, and this had never happened to me before. I lived in London for 8 years, and in fact, when I first came here, I had tried to tip a bartender on a card, and he just looked at me like I was crazy, and so I hadn't even tried since then. So I mentioned this to some friends and colleagues, and some of them had had the same experiences. And so I thought, okay, well, let's look into this. And if it's happening more and more and in a way that we can quantify, maybe we'll have a story.
Yeah, it's a great story. I've noticed the same thing. Although, of course, the pandemic has been very rough on hospitality. So is it that? Is it the Americanization? What do the numbers tell you?
Well, well, first of all, we reached out to the payment networks. We talked to Dojo and we talked to SumUp, and they confirmed for us that, yes, in fact, it is happening. More merchants are asking people to pay a tip, and more people are tipping. And in fact, there's more tipping going on now in pubs than in taxi cabs or in hairdressers, for example.
Wow.
So yeah, there's a few things that are driving the change. First of all, society is going cashless. So one big thing that's been happening is in the past, you'd walk into the pub, especially for a small transaction like a pint or two, you'd pay with cash, and then you'd receive some coins back as change, and the customers might put it in their pocket, or they might leave it as a tip for the barman. But it was a small amount. And what's happened, in recent years is virtually everything is being done with a tap. I don't even walk around with cash money anymore. And so the technology has been updated. And then, to your question, how did the pandemic affect this? Well, ordering. If you remember, when people came back from the lockdowns, people were being asked to order over QR codes and use their phone. And that made it easier for restaurants and pubs to ask people for a tip. And people were feeling generous. They felt bad for the wait staff and the bartenders who'd been out of work for so long. And so they started doing it. More recently, the pubs are starting to see this as a way to attract workers and give workers a perk that will help the pubs compete with restaurants and hotels for talent. And this is at a time when profits are tight, wage inflation is on the rise, food inflation is on the rise, and workers are hard to find.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.